Well, joining us now to share his commentary on the day's market performance is Reko Nare from Anchor Capital. Reko, hi, good to chat to you on Business Lunch. The market picture today, yesterday down, today stable.
Hello, Ray. Thanks so much for having me. It's good to be on the show. And hello to your viewers. I think, yeah, as you said, sort of the jitters that you've seen within risk-off assets, more broadly speaking. And then when we look specifically towards our market, really just a touch firmer today, with, of course, resources leading most of the performance that we've seen today, up between sort of 1.3 at the strength of today, 1.6 sort of range bound around about that point. Financials largely flat. And then, of course, as you highlighted right at the beginning of the show, you did see the rand strengthening to about 17 rand 18 cents, 17 rand 17 cents. And of course, a large part of that would have been on the back of the inflation print and what investors are beginning to price as far as what the SARB will do into tomorrow's interest rate decision. But I think from our side, the key levels to watch when we look at the rand is specifically around that 17 rand 04 level to about 17 rand 26 cents on the upside. But yeah, certainly I think it is a market that's looking for direction more broadly. And of course, we'll look towards sort of the SARB to kind of guide us forward as far as our local market is concerned.
I have to ask you the million-dollar question for those with bonds, of course. Inflation slightly up today, 3.6. So looking at that figure, I mean, the SARB could go either way tomorrow.
Yeah, certainly, Ray. I think we're chatting about it just before we started the show. Look, there's cases to be made on both sides. On one side of the story, there's, of course, the fact that you've got this inflation that's sort of surprising to the downside somewhat. The expectation, I think, for this specific print was that we would see 3.7 coming from 3.4 in the previous month, but instead came in at 3.6. So, yeah, kind of trending in the right direction, one would argue. And then, of course, as we discussed just before the show started, there's, of course, the sluggish growth argument that economists continue to make. So I think, look, that would sort of give some type of bias towards the SARB shifting towards a cut tomorrow. But, currently where we stand, economists are by and large pricing in a cut of 25 basis points at tomorrow's meeting. But of course, the SARB in its hawkishness will probably point towards the rising inflation risk as a reason to continue to keep rates on hold. So I think that's kind of the balance of the equation at the moment. And we walk into tomorrow's decision waiting for the SARB to make the call and guide us forward.
Right, some of the individuals today as well, looking at life, healthcare, a little bit of an improvement there. What's your take?
Yeah, right. So look, at 12 rand, a share at the moment, the share price reaction currently, just before we started the show, I think you're looking at a share that's under pressure, pricing it down, about 6%. Look, it has lagged the broader market year to date, as well as within the last 12 months. If I think about 14% versus a JSE that's done 34%. One could obviously argue that, the JSE has largely been driven by the resource counters and so forth. But when you actually dive into the numbers themselves, I'd probably say that it was a decent operational update. If I think about that, along with the 4.5 billion rand that's going to be returned to shareholders on the back of that life molecular imaging business sale that you chatted about right at the beginning of the show. But when I look at it, look, the core revenue number between 5 to 6%, not bad at all. Higher paid pension days, improving acute margins, that's not too bad, but of course costs and sort of specifically within the renal dialysis business, of course, are diluting that and of course causing some cloudiness there. But I think what they're currently guiding to is, a normalized HEPS of anywhere between 7 to 12% higher. But of course, I think the market is sort of looking for more when they look at life healthcare, as far as just looking for more clarity of what the business looks like post this disposal.
Yeah, and then of course RFG as well, modest results coming out today. We had that in our bulletin earlier on. Your thoughts?
Yeah, with RFG, look, I would probably say it's been a relatively resilient set of numbers and a relatively resilient business, just given the shape of the South African consumer this year. Look, the reaction so far, market isn't pricing it too positively, down about 2.2%. But if I think about a share that's up about 48% against a market that's been up about 34%, largely has outperformed the market at 48% versus 34, as I said. But yeah, modest. Top line growth, growing revenue at about 1.6%. I think the reason for the pressure in the share price today is, as you highlighted right out at the beginning of the show, the fact that that they said in the results that they will be reducing the dividend to 90 rand. Or rather 99 cents, which represents a 10% decrease in the dividend number. So I think for investors, value investors looking for safe places within the South African market and specifically within SA Inc., not liking that, hence the pressure that you're seeing today.
Yeah. Okay, right. Southern Suns, okay, they had that problem, I think, with that hotel in the Seychelles. But yeah, I mean, they have had their headwinds.
Yeah, certainly, Ray. I think I'd probably say, look, a resilient set of interim numbers. Group income up 5%. Of course, they did guide to higher occupancy rates and higher room rates. They have highlighted, that offshore and the offshore business, they are seeing some weakness there. And that's largely been driven by, rising costs. And that's what's kept EBITDA flat and margins sort of going sort of a little bit backwards. But I will say that, when I look at this business, I'd say a business that's got a balance sheet that's sort of in better shape. If I think about on one side, you've got the refinancing that's going on there, lower net debt to EBITDA, for an investor looking for value in this market. I think that does look quite constructive. And then, of course, you've got the forward bookings that come from the likes of the G20, from the mining in Daba, which does sort of paint their summer season quite constructively. So I think, yeah, a resilient set of interim numbers from our side.
All right, well, that's good. So, okay, your stock pick now. I've been waiting for this. Your stock pick.
Yeah, Ray. So I'm going to go with LSEG, which is the London Stock Exchange Group. I'm a pure numbers guy, so for me, what do the numbers look like? Trading on a forward PE of about 20 times, which is about a 25 times, or rather 25% discount towards its sort of a historical average. And then when you look across the peers as well, trading at a fairly strong valuation relative to its peers. And of course, you've got the EPS growth that is kind of largely coming in at about 12 to 14% EPS growth, which is quite strong. They've got a high moat around the business. It's a data-rich financial infrastructure business. So it does more than just sort of buy and sell stock on its exchange. It does sort of the broader data exchange and the broader financial infrastructure that we think is pretty strong and sort of bodes well as a theme for the future. And that's 70% recurring revenue towards its business. Its data set, it's difficult to replicate using, sort of AI models. And now, of course, you've got the fact that, they've finalized the acquisition of Refinitiv, which certainly does put it in a very constructive light as far as return on capital, rising as we look off into 2026 and 2027. So that's LSEG, the London Stock Exchange Group.
I find that so interesting. I was waiting for the end. Reko, thank you so much. I appreciate you taking the time to chat to us this lunchtime. That was Reko Nare from Anchor Capital.